All right, now let's definitely, I did talk about the Naira earlier, and it's remained below the 1.6 level since February 28th. Could our FX woes be over? Time for the commodities market update, and we have Dumebi Oluwole, senior economist, FDC, join us right here. Is it too early to bring out the champagne? The Naira is strengthening. Is it time to celebrate?
I would say just hold on.
As you hold on.
Let it keep chilling.
Put the champagne down.
Yeah.
Okay, all right.
Not down, in the fridge.
In the fridge.
Meaning there's time to...
So I'll still pop it at some point.
Exactly.
Okay.
Exactly.
So how are you seeing it?
I mean, I would say it's some respite that we're seeing. And obviously, because of positively anchored investor sentiment and also market expectations, and this is split in two ways: inflation expectations and exchange rate expectations. The CBN did make a very bold call at the MPC meeting, and one of the reasons why they did do that is so that they're able to positively anchor market expectations to taming or bridging the gap between interest rates, effective interest rates, and inflation. And we're seeing this gap beginning to narrow. TBO rates are already higher, and we expect that trend to continue as the monetary policy transmission mechanism, continues to strengthen. So basically, we're seeing a more hawkish CBN sticking to its core function of achieving price stability. And what this is doing is anchoring inflation and exchange rate expectations positively. We're also seeing that the CBN is trying to reduce money supply growth, or at least reduce the rate of increase in money supply. And the thinking here in terms of, I would say, economic theory now is, when there's too much money chasing too few goods, and the too few goods now that we're looking at is the exchange rate, the demand for dollars. So we've seen money supply completely surge between January 2023 and January 2024. We're seeing an increase of over 70% in money supply. So clearly there's a lot of, there's a lot of Naira right now. Whether it's in the hands of the people, it's another conversation. But from the data, we do know that there's a significant increase in money supply. Cash in circulation is also high. But the question now is, the people that have this cash, what exactly are they using it to do? And one of the big things is the Naira that is in supply today is being used to demand for dollars, either for hedging or for purchase, for imports, or speculation, whatever it may be.
Right.
We're seeing that increase in money supply growth correlates significantly with the demand, with FX demand, and that's one of the drivers
of speculation. We Binance has been in the news. That P2P market.
Yes.
And ever since that P2P market, that's been shut down for now. We've seen some kind of stability. I mean, I wouldn't draw such stark correlations. Right. Simply because what is fueling all of this is there are lots of things happening right now. We're seeing effective interest rates increase. It is very possible that people are moving their Naira, instead of trying to demand for more dollars, they're investing in treasury bills to get higher yields. There is that happening. We've also seen the CBN also kind of address dollar demand from commercial banks with the circular that they released, I think immediately after the devaluation that happened earlier in January. That is also an effect that we could see happen here. The other thing is, people are probably just, people don't really have enough money to actually make this, so much demand for dollars. So there are a lot of things happening, a lot of factors that could have led to this. It could definitely not only be Binance. Right. And that's also not to say that it's not possible that, this is also one of the things that have driven the demand. But to outrightly say this is the reason, I would say that's very wrong, because it has nothing to do with market fundamentals. Okay, so we will definitely take that and see if this is actually sustainable, because we're hoping, that this, strengthening continues, going forward into 2024. But looking at prices now, commodity prices, at the end of the day, the average man wants to know, is this going to bring down the price of Gary now that we're seeing stability, with the dollar?
Yeah. I did expect that question. And I would say that an increase in interest rates is supposed to do that. But then there is a lag effect. the interest rates were increased February 26th or February 27th. Prices will not come down until about 6 months after. There is that lag effect, especially for developing economies where the transmission mechanism is really slow. So typically for a developing economy, what we expect is when there's an increase or a change in monetary policy stance or monetary policy tools and adjustment of interest rates, it does take about 6 to 24 months to have a complete effect, to have the desired outcome that we need, and which is a significant decrease in inflation. That is not to say that we would not start seeing that tempering, start to happen. It will happen, but it would happen at a very slow pace. And remember that the inflation numbers that we're going to be hearing, or we're going to be seeing very soon, I think that's by middle of March, at the inflation numbers for things that happened in February, which we still expect, to be very high. In fact, we do expect inflation for February's headline inflation to actually come in at about 30%, and that will be the highest inflation in Nigeria's democratic history. Now, moving on to how it would reflect in the price of commodities. I did say it will take time for that to happen.
6 months. Or
yeah, so the near term, exactly, and we don't. We most likely would not see another rate hike by the March meeting. It's just too close for another, tightening.
Wait,
yes,
maybe
so,
some kind of hold.
Exactly. So the
meeting.
CBN might most likely would maintain interest rates where they are, and the reason why they would do that is to say they want to see the impact of how the first rate hike, definitely translates into reduced money supply growth, reduced inflation, and more exchange rate stability. And again, just back of the question that you asked me about prices. So what I'm saying is we would not see prices begin to significantly decline in the near term. Prices will still remain elevated simply because the exchange rates used to import the pasta that you were consuming earlier in the year or maybe last year has significantly jumped, even at 1,500, even though 1,500 is somewhat stable today. So it's still significantly higher. Businesses will still pass down the burden of higher importation costs, higher operating costs. Remember, there's electric power supply. They will pass down this burden to consumers in form of higher prices. Logistics costs are still very high. Insecurity is still happening. Agricultural productivity is still low. But what this definitely calls for is a consolidation between fiscal and monetary policy authorities.
Right.
We cannot say the monetary policy authorities are not doing their job now. They are. They need to do it more, but they've already started. They've kick-started the engine, and the fiscal policy authorities now have to come to the table. There's no longer room for flamboyant spending. If we're going to spend or even intervene in any sector of the economy, it has to be extremely targeted to the real sectors of the economy that can employ people and contribute to consumer spending and consumption positively. More importantly, it has to be able to equate to productivity in the economy to support output and support GDP growth. So what this means is we cannot see spending on things that do not make sense.
Right, and I'm talking about things that do not make sense. Things that do make sense, like I was at pharmacy yesterday trying to get some multivitamins, and I saw the price and I was like, you know what? Maybe I should go get fruits instead. Maybe I should get my vitamins from fruits because the prices are incredible.
Ridiculous.
But you also go to the fruit market and you see the prices of the fruits are also high. So we're hoping for stability, going forward at this time. But that's the most we can take. Thank you so much, Abdul Oluwole, senior economist at FDC. It was great having your perspective today.
Thank you.
Right. So definitely, we're seeing the markets at this time. Yesterday's close. Let's just get a quick check. See how the NGX managed to close yesterday. We see 0.10%. That's the jump there. 98,847 for the first trading session this week. 55.88 trillion. That's the market cap. We did get that first listing of 2024 yesterday. That's Transco Power. So the market closed green yesterday. We're looking out for how it's going to close today after the bell today. Thank you so much for watching. I'm Ladi Williams. I hand things over now to the Sunrise Daily team.